What's going on, traders? In this video we're going to talk about how to find high probability setups at the trend line and what we should be expecting and how we should be reacting when we see a trend line break. So we have a two-tier channel working lower. This is a downtrend. Prices are making lower highs, lower lows, and there is a rule in trading that we should stick with the trend, so which is obvious. Everybody knows this rule. You probably read it in all the forums and all the trading books. So we are sticking with the trend because this is a valid information, valid rule. But I've got a question from a trader asking me whether when we see prices reacting and reaching close to the trend line, do we sell blindly the trend line expecting prices to reverse off the trend line? And the answer to this is no. It's a big no, because we want to find the highest probability setup as possible. We don't want to take losers that are, unnecessary. So the way we filter the trades to make them as high a probability as they can possibly be, there are a few criteria that we need to meet in order for us to take this trade. I mean, there are a few traders who can put a resting limit order at the top at the trend line and hoping to get a scalp, but that is not reliable. That only works sometimes. And the best way is to wait for prices to confirm the trend line, because we want to see that the traders have the same intentions as us. Because we are following the big institutions, and we want to see that the institutions are really sticking to their guns and their intentions are really keep selling the market off the trend line. So the first thing we need to do when we are trying to find the highest probability setup at the trend line is we need to pay attention to the previous trend in the opposite direction, to the counter trend, because there are going to be corrections. We are in a downtrend and prices is making these small bullish corrections working up higher. You guys can see it on the chart. It is mostly people taking their profits, but there are also some people who are actually trying to pick bottoms, even though this is a downtrend. I mean, whatever reason they have doesn't really matter. So there are these corrections, these counter trends, they're working higher. And the best way so we can filter the safest setup is we need to wait for a break and a new highs, because these corrections, they're small trend lines. They're tiny little trends inside of this bigger trend. And the rules of the trend line applies as well to these tiny little trends. And the rules is after a break of a trend line, there's most likely going to be a retest of a new extreme. So when we see these bullish corrections, these bullish counter trends in the downtrend working up, we need to wait for a break and a new high. After break, after prices break, and don't worry guys, I will make the chart a little bit bigger soon, but I just want you guys to see a bigger picture. After a break of these smaller counter trends, there's going to be a retest of a new extreme. And when the prices retest of a new extreme, then it's safe for us to take the trade. And this is one part of high probability setup. And you guys can see, if you're just a little bit patient here, prices broke, this uptrend working higher, and you have a new high and the setup at the trend line. Prices working up higher here, you have a break and a new high prices, and you have a setup at the trend line. So we are waiting. We just don't sell blindly or don't buy blindly in an uptrend. We want to see the signal bar at the trend line, and the signal bar in this downtrend should be as bearish as possible, some nice bearish reversal bar. So first we need to pay attention to the counter trend correction that is happening in the market. Then as well, we want it to be two-legged pullback. We want it to be a second entry. And if you look at the situation right here, now is the time to make it a little bit bigger. If you look at the situation right here, we have a first entry short, pullback, second entry short. Now there is a little trend line working up higher, but at this point on, this is a two-legged pullback. And if this was just a first entry, this would not be ideal setup, because we are inside of this trend line. It's just a first entry. But because it is a second entry, because market likes to move in twos, two-legged pullback, and it confirms the trend line, the second entry is high probability setup in itself. So that's the second way we find the high probability setup at the market. We either wait for prices to have a break and a new high, or we wait for second entry. And if we get both, that's ideal. This is just such a huge downtrend, big gigantic move, that it was very hard to fit second entry and a break and a new high in one this little counter trend. And I will show you in much more detailed example. So these are the rules that we have to follow if you want to take safe entries in a downtrend, because as you can see here, the prices, we have a setup here, and even though it would have worked for a scalp, that's not the point here. Hindsight is always 20/20, obviously. But there are times in the market when you will not get the scalp portion here, and you will get stopped out. And the reason is, notice how we're now working higher in this two-tier channel, working up higher. And this is a bullish uptrend right now, working higher. So we need to first let this play out before we're going to take a short off of this trend line. So hopefully you guys can see why this setup is not good and why these setups were much better. These are the high probability setups, and this is a not high probability setup, and this is why it barely worked, and in a lot of instances it won't work at all. As you guys can see, we have a first break of this channel, but we're continuing in this counter trend of the overall trend down. So this is our main focus right now, and you guys can see how geometrical perfect market can be. This is the first leg up. You guys can see, you can measure the leg. First leg up, two-legged pullback, second leg up to the very tick, and there is a one leg right here, correction, second leg right here, measured legs, two measured legs, perfect price action. And there, you know, there are a level to this. There's a two-legged pullbacks inside of two-legged pullbacks, two-legged pullback right here, and this can create a one leg in bigger picture, and two-legged pull, and this is the second leg. So you guys can see that the market loves to move in twos, and second entry is extremely high probability setup if you find it at the key entry point. If second entry is located at the key entry point, which is the trend line and EMA or support and resistance lines, that's a very high probability setup. And notice how overall, even though we have this bullish correction working up higher, this bullish uptrend, we have a break and a new high, just like price action keeps telling us. But remember, the big players, their still intention overall, the longer term goal was to keep selling this market. And we have the break, we have a break, this uptrend, break and a new high. And notice how prices managed to make a new low of this bigger channel working up lower. So today is such a massive that you get two trends. You get this trend inside of this trend, but it all still, you know, plays out in the end. We still have a new low right here. Prices make a massive leg to a new low of this downtrend working lower. And from here, you can see prices are beginning to reverse or go into correction. That's what's going to happen after break and a new extreme. Prices will go into correction or possibly straight out reversal. So these are the things to look for. And now we are at today's chart as I'm making this video. And this is a, you know, because the trend lines, they work on the bigger picture when you can see massive sell-off, like I showed you earlier. There was a massive downtrend, 100-point move, but it works the same way on the smaller trend lines as well. The price action is still works the same way, and if you learn to spot this, you will have a gigantic edge in the market. And the other question was, how do we react, and what is our thought process when we see a break of a trend line? So we have this trend line working up higher. This is a short-term trend line that you would see when you first would come in and you first open up your chart. So you guys can see we have small little consolidation right here. This is really undecisiveness. Nobody knows what's going to happen, and eventually prices broke higher and traders were starting to buy in, and we have a first break of a trend line. So what we are expecting a new extreme. Obviously, after that's the rules of a trend line. After a break of a trend line, there's most likely going to be a retest of a new extreme. But once again, we are looking for highest probability setup as possible. And the same thing when we were looking for bounces off the trend line, this is what we are going to be looking as well. So first thing we need to do, we need to let play out the counter trend that is happening. We are in an uptrend, and you can see this tiny little downtrend working lower. We have a break and a new low. This is exactly what we want to see. We want to see all the bears and all their attempt to play out. Let them do their thing. You know, we don't let them do their thing. We don't have to start buying early viciously, and you will get stopped out here. This is just the first break, and this is just the first entry, and this is not high probability setup, and this is why you would have failed. And obviously you don't want to sell either. Just because you have a break of a trend line doesn't mean you want to automatically start to look for reversals, because I see a lot of, you know, traders on YouTube, they teach this. They know when you have a break of a trend line, you should be automatically selling in this particular instance. No, that's not going to happen. People want to see a retest of a new extreme. That's just how human psychology works for some reason. So we have a break and a new low. We also have a two-legged move. One leg, pullback. Second leg, not quite measured enough because we are locating at the EMA. EMA is another key entry point that is serving as a resistance or as a support. So if you're a new trader to this channel and you're not using the EMA, this is a 21 bar EMA, and I would really recommend you to plot this because this is a really helpful indicator, and this is just a supportive indicator but can be extremely helpful. So we have a break and a new low, and we're also looking for second entry. We have a new high right here, pullback, first entry long, pullback, it failed, second entry long right here. I mean, excuse me, it didn't fail right here because we are still part of the first entry. So the second entry appeared here. Although you can make a case for second entry being this as well, if you count it a little bit differently. Nevertheless, here, take a look how far away you are from EMA. And you already know probably my style. I like to find the setups at the key entry point. So when you're this far away from EMA, this is not a good setup to take. So now you're locating at the EMA, and this is a two-legged pullback. So this is now the safe place to look for the prices to make a new high. But there are going to be instances, or before I'm going to jump to the conclusion, here we get another example working. We have this downtrend working lower. We have a first break of this channel, big bullish bar. And probably most people's first instinct would be to start buying this. And this is wrong. Once again, give the sellers a little bit more breathing room. And they're going to retest of a new extreme after the bulls are trapped. And we have a first entry short, pullback, second entry short at the EMA. So this is a two-legged pullback. We also have this uptrend working up higher. We have a break and a new high. So this, the second rule. And you guys can see prices made eventually new low just by one single tick. But there are going to be instances where you either are not going to make a break and a new high, so meaning there's only going to be still the uptrend in this instance is still be in play. You will not get a break and a new high, or sometimes you will not get two-legged pullback. It will be just the first entry, and these are not high probability setups. So what are we looking for in this instance? All right, so I found the perfect example because on today's chart, we actually had a two-legged pullback or second entries to make a new low. And we ended up with what to do when we don't have a two-legged pullback or a second entry. So in this particular instance, we are working up lower in this downtrend. So we have a break of this trend right here. Once again, so we have to draw the trend line. And look, we are working up higher and we see that we are still inside of this channel. We are, we have a first entry right here, but we cannot take this. This is not high probability setups. Even though we're looking for a new low, this is just the first entry. So we cannot take this. Now, we're still working up higher inside of this trend channel, working up higher. So we cannot take this as well. There's a second reason why we cannot take this trade, even though we are expecting for prices to make a new extreme. So this is the third rule that we are applying when the first two rules, the second entry or break and a new high, are not being fulfilled. And this is we wait for two failed attempts in the counter trend's direction, meaning we wait for failed second entry long. So we're working up higher. This is the new high, pullback. First entry long, we triggered higher above this bar. So this is the first entry long because the prices are most likely going to attempt to make a new high of this correction working up higher. So first entry long, you push through the EMA. So you guys can see that a lot of people are starting to be selling the way we sliced through the EMA, pullback, second entry long. This is the second trigger long about this bar. First trigger was here, second trigger was here, but this is way too low. This move is way too low and you're way below EMA and you're in a downtrend looking for a new low. So this is a first entry long, second entry long. So this would be a third rule that we apply. This would be the perfect setup for us to be looking for a new low. So hopefully you guys can see that if the first two rules are not being met, the second entry long or a break and a new high, we can be looking for a failed second entry long in this instance, or failed second entry short if you're looking for, uptrend. to make a new high. We are here looking for downtrend to make a new high, and if we are looking for uptrend, we would be doing the opposite. And here we have a first entry long, second entry long, that failed. So this setup we can use. This is a high probability setup as well. And once again, you guys can see market loves to move into, the second entry long failed and prices made a new low. And we eventually ended up going much lower. And I'm not going to let you go this quickly because we still got a little bit more things to learn. Because if you want to be a successful trader, you want to study the market every single day and watch the current market structure that is happening every single day, because the patterns will repeat over and over again. So you want to get as much screen time as you can. So this was today's price action. And just as I came in, we are broken up higher, but this is still way too early. This is pre-market open session, the early morning session. And we have this option working higher. We have a break and a new high, and prices made a second attempt to make a new high. And then we traded down lower. So from this point on, when I saw prices make this double top, almost a triple top right here, I was expecting for prices to reverse from here. At this point, I didn't have this resistance here because I drew this resistance once we bounced over here. But at this point on, I was looking at this as a first entry long, second entry long, and I was looking for a reversal pattern and hoping to catch this exactly on this bar. I was hoping for this bar to break lower and to catch this move down to probably get to here to the very low of the day. But it didn't happen. We bounced off here. And now we have a triple bottom right here, very clear triple bottom, and it's starting to look quite rangy straight off the bat at the very beginning of the day. So this is the new low. We push above the EMA and we have a first entry long, pullback, second entry long right here. This is the bullish bar. We triggered higher above this bar. I mean, first entry short, second entry short. I probably said a second entry long, excuse me. First entry short, pullback, second entry short. We are above the EMA. EMA is holding prices each time. And the fact as I was here looking for the failure and reversal pattern and it didn't happen, and prices pushed through the EMA, I had to switch the gears here. And this is why you trade the market you get and not the market you want, because I wanted to set up the reversal pattern setup. And the institutions, they had other plans. They were actually looking for take these prices higher. So what I would do, I said, okay, this is what you guys want to do, and I'm just going to follow you. So first entry short, second entry short, high probability setup. We are still above the EMA. EMA is holding prices, and you got still quite some room before you reach these highs. And Lord behold, it worked for a scalp. And now you don't want to go long here. Even though EMA is holding prices here, you're going long exactly into this resistance. And this is a sure way to get trapped. So just let the prices do their thing, and they pushed higher, they pull back, you have a new high right here, you have a first entry long, pull back, you're working up lower, and you're expecting some second entry long failure. You're hoping for second entry long failure, maybe prices stick one tick higher above here and then give you a reversal pattern, because we definitely have a break and a new high right here, definitely break and a new high, and we broke above this resistance, and most breakouts will fail. But this was quite still early for me to fade this, because this quite still looked a little bit bullish. So I wasn't too sure about fading this. But remember, most breakouts will fail. 90% of breakouts of trading ranges will fail. So you have a first entry long, you're working up lower, and like I said, you're hoping to get some second entry long failure, but it didn't happen. You get a second entry long failure all the way down here. Way too late, far away from EMA, too close to this support. So even though this is a break and you're waiting for a new low, this is a failed second entry long, you're going long all the way late of this move. This move has already happened and you're going late. You're going short very late. So you obviously had to skip this. And now you have this, like we mentioned, first entry short, second entry short, break and a new high at the EMA. But you're very close to this support. We have a triple bottom right here, quadruple bottom confirmed right here. So only when you want to take this, you want to place your limit order further back. That way you can get safely out. You can put your target profit at this support. So this is the safest way, because other than that, you probably would have failed. And there's a reason why this scalp would have failed, because the strong support is holding prices at this point on, it's very clear, and a lot of traders can spot this because this is a quadruple bottom at this point on, and this is very easy to see. So you have a break and a new low. And look at this gigantic bar. We are bouncing off the support, and this is looking like a trading range now, definitely. So when we are coming off the lows, you're probably expecting for prices to reach, you know, the highs, the resistance, just you would be expecting. So big bullish bar sliced through the EMA like it's not even there. We completely ignored the EMA. First entry short, pull back. Second entry short, nice big bullish reversal bar, but you're going long at the very high of the move. And I already mentioned this in my previous videos. I like to take the reversal patterns that are a little bit closer to the EMA and a little bit deeper. The pullback is a little bit deeper. You're going long, you know, quite late here and at the very high. And this is exactly what's going to happen. You almost 90% of the time you're going to get that little bit of a pullback. I mean, it still would have worked, but you guys can see the body is far away from EMA. But here you're a little bit closer to the EMA with the body, and it's still part of this second entry short failure. So this is the safer entry, and you're still above the EMA. You're still expecting for prices to reach this high. And notice this was a spike. This was a very big bar. This was a very big spike, and prices just kept going inside of this channel. So this is why I found that this is a spike and a channel, because this was a very steep move up. You have a break and a new high, perfect price action. You're working up lower, you have a sell-off here, and this setup, even though it may sound counterintuitive for a lot of you, this is a very safe setup because 90% of breakouts of trading ranges will fail, and now you have quintuple bottom, if that's even a word. You have the fifth bounce here off the support. You are clearly in a trading range, and look how far away you are from EMA, and this is a first breakout to the low side. You know most likely you're going to snap back. So even though this is looking like, you know, you're picking bottom here, you're not really picking bottom here that much. This is a failed breakout lower, and the support is proven a lot. So this is a little bit of a aggressive, but it is not that aggressive as you might think. So learn to trust these failed breakouts. You guys can see you're working up higher, and I was expecting some sort of reversal pattern here, but you know, sellers came in and you instantly closed below EMA. First entry short, second entry short, but the bullish bar closed below EMA. So you don't want to take this. You know, the reversal pattern is just like here when prices are holding above the EMA. And then the second entry long, first entry long, second entry long, and once again you're below the EMA. So there was a little bit of dilemma for me here, where I was trying to go long, but you're still being below EMA. So I wasn't really trusting these setups. I mean, it worked, but you know, you're below EMA, and you can make a case for this support being here, obviously. But by the time this setup, this bar setup and this bar, now you're just going up and down. The EMA is middle inside of this bar. This is a smaller trading range, and I think the best way is to skip this. If there was some little bit better setup, you can take a long here, but you know, I don't think, it may just be my personality, but you know, this is looking too congestive for me. But you're coming off this strong support once again, double test over here, so obviously you can take a chance here and go long. And you have this trend line working up high. Once again, draw these trend lines. You will have such an advantage over other traders. It's ridiculous. You have a break, few legs to a new high, you're working up lower, and you have a break and a new low, and you have one more push higher. And honestly, I was expecting for prices to continue working up higher, but we made this double top right here, and we have a first entry long, pullback, second entry long. Prices close below EMA. This is a good sign here. So I wasn't, you know, on the board of shorting this market because we already have a break and a new low. But we continue working up lower, and prices kept closing below EMA, and with these two failed attempts higher and a nice bearish reversal bar inside of the EMA, you know that a lot of longs got trapped. They're going long below EMA when the break at a new high already happened. So a lot of longs got trapped here. So I think this is worthwhile short taking this, even though it's not ideal because you already have a break and a new low. And you just made a few more legs to a new low, and you have a first entry short, you push above the EMA. So once again, second entry short, prices are, EMA is holding prices, second entry short failure, big bullish reversal bar. This is a reversal pattern, and I mean, this reversal pattern is absolutely perfect. it's off the trend line, off the EMA. You're hugging EMA nicely. Failed second entry short because you have, this is the two failed attempts in the previous direction, which was the downtrend, but the downtrend already played out. So it's safe for us to go long. And you're working up higher. You have a tiny little break and a new high. So you would be expecting for prices to make now to reverse or goes in some sort of a correction. So we have a first entry long, pullback, second entry long. Oh wow, and it worked here. So at this point on, you should be expecting for prices to reverse here. You have a tiny little break and a new high. So you should be expecting for prices to go lower now, to start selling off, but it didn't happen. So you have to start paying a little bit more attention here because, okay, first entry long, second entry long, you're expecting failure and going lower, and it didn't happen. Wow, okay. So you have this big bearish bar. Certainly now, you know, sellers, they will go long, they will go short. I mean, if this break is not clear enough, then this break is close enough to being an attempt to make a new high. So this gigantic bearish bar, surely sellers will sell off the market now. And once again, big bullish bar, and once again we close above the EMA. So once again, wow, this is a little bit, you know, I wasn't expecting this because the sellers are not shorting the market. And you have this is the new low right here. First entry short, second entry short. This is a second entry short where it triggered, and this is where it fell on this big bullish reversal bar. It's above the EMA. EMA is holding prices. And just like your thought process that was happening previously, you were expecting for prices to keep going lower, and it didn't, and they actually trapped here. The sellers got trapped here. Two failed attempts to go lower. Nice bar above the EMA, and you guys can see we actually made a new high, perfect price action, and prices, you know, took a huge dump here, 3 massive bars. So you know that, you know, the sellers are now looking to short this market. They just gave the bulls a little bit more room. 3 massive bars lower, new low right here. First entry short, pullback. Second entry short. You're quite far away from EMA, but this was just a strong move down. 3 massive moves down, and this is a second entry. If this was just the first entry, I wouldn't take this trade, but since this is a second entry short and a nice bearish bar, I think it's worth taking this trade. And you have a break and a new low, and the prices, as I'm making the video, prices are doing their thing. So hopefully you guys, I'm gonna wrap it up. So hopefully you guys get a little bit more, you're a little bit more sure how to react when you see a break of a trend line, and how to find the highest probability setups while looking for a new extreme, and how to find high probability setups at the trend lines. So I'm gonna wrap it up. If you enjoyed the video, hit the like button, and I'm gonna see you guys in the next one. Bye guys.